auto insurance policy. Combining your home and auto always is the greatest discount you're going to get, and if you're married, you want to make sure you're on the same auto insurance policy. I just hope everyone had a safe Labor Day weekend, a nice 3-day weekend. I took off of those 3 days. I sure did. I needed the break. And come to find out today, Kevin Hart was in a serious car accident. He was driving his 1970 Barracuda, to my understanding, and he was in a serious car accident. He had to have surgery on his back, but looked like he's going to make a speedy recovery. This is how important it is to be safe on the road. And all of a sudden, you know, here's this guy, famous man, and he has a car accident. No one is immune from these things. You know, no. I've talked to people and they said, well, you know, I'm not in car. I've never had a car accident. I've never got a ticket. Well, good for you. If you never got a ticket or never received a car accident, never been in a car accident, good for you. No one wakes up in the morning and says, I'm going to have a car accident. It just don't happen that way. It just happens when it happens, and come to find out whether your coverages are good on your auto insurance. Now, you may think you have full coverage, and I've had this conversation quite often with a lot of my potential clients and my clients, where I break it down line by line what the coverages are on your auto insurance policy. Now, if you don't know what the coverages are on your auto insurance policy, don't take for granted, because you know, you talk to a person over the phone or you purchase auto insurance and you don't know what the coverages are. As long as I got full coverage, and a lot of us use that too often, too loosely, thinking that if anything comes up on your auto insurance that you're fully covered. That's not necessary. That's not necessarily the truth, because if you are in a car accident and someone is seriously injured, let me use Kevin Hart for an example. He had to have back surgery. Okay, that's probably a $300,000 surgery. Now, do you have $300,000 worth of coverage on your auto insurance policy if you were at fault? If you have the minimum coverage on your auto insurance policy and you had a serious car accident wounding other people in the car along with yourself, do you have enough coverage to cover those medical costs? This is why it's so important to tune into Your Insurance Connection, because you get a full review when you come to my office. You know, if you own a business, you should have better insurance coverages on your auto, or on your business, or even on your personal property. You should have the highest limits as possible that you can get, or something that's reasonable. Let's say, for instance, if you own a business, you should know no minimum than $100,000 per person, $300,000 each accident. Even if you don't own the business, you should be carrying that in the state of Nevada, because there's a lot of car accidents in the state of Nevada. And when you are in a car accident, whether it's your fault or not, and someone is injured, you know, again, these auto insurance companies that we get you insured with, there's nothing. It's nothing for them to replace an auto that's $20,000, $15,000, $17,000 on an average vehicle. However, when you're in the hospital and your hospital bill is in the upward to $100,000, $200,000, if you're in the hospital for a week, you have some serious damages to your body, and you find out right away what the value is on your auto insurance policy. It may be low value, or it may be high value. Who's responsible for the balance? If you don't have enough auto insurance coverage on your car insurance, who is responsible for the balance? You know, I want to sit down with you, have an insurance review. Veronica's with us today. Yay! She's with us today. My phone number is 702-236-2624, 702-236-2624. Now, I know what you're thinking about. I can't afford those higher coverages. Sometimes you can't afford not to have them. Sometimes you cannot afford not to have them. Sometimes even having the higher limits of liability on your auto insurance policy versus the lower limits saves you money. It does save you money. It does save you money, because, again, if you're in a car accident and it's a serious car accident, you could be out of pocket a lot of money. You can get sued. I know this one particular person. He came to me years ago, and, you know, he heard my show, and he said, what you're telling the people, they should listen, because he was sued for $25,000. They were taking well over $400 a month out of his paycheck to pay that balance over a period of time. The courts ordered him to pay $25,000 because he did not have enough car insurance on his auto as a result of an at-fault accident. Now, you may think, well, I don't have nothing. I don't have nothing. So what are they going to take? Well, they can take your paycheck. They can garnish your wages. Don't let that happen to you. Call us today. Let's sit down and have a review. 702-236-2624. 236-2624, 702-236-2624. My name is Donald Marquez. We can kind of work with those coverages a little bit. Sometimes even when you raise your deductible on collision to $1,000, and you may say, oh, that's a lot of money to come up with. No, it's not. I have $1,000 deductible on my collision portion on my auto. I've never paid it because I can take I will take a cash settlement. So if I have $3,500 worth of damage on my vehicle, as an example, give me $2,500. Let me go shop for my own auto body repair shop to get my car fixed myself. Because when you go to these auto repair facilities, the first thing they ask you, who's paying for this? You or the insurance company? That's the reason. That's the reason why they ask that question. They ask the question because they know when the adjuster comes out, they put a little extra in there when the car's on the ground. Okay, they put a little extra in there when the car's on the ground with damages on ground because they can't see underneath. So the insurance adjusters will put a little bit more in there as far as the money, the recovery of the money, so your car can be repaired. So the adjuster don't have to come back out because he's busy going from shop to shop to shop. So you see the car on the ground and say, okay, this was probably a $2,500 damages, but I'm going to put an extra $1,000 in this estimate for any underneath damages is unforeseen. Now, if it's serious underneath damages, of course, it just has to come out. But he tried to pad it a little bit so you don't have to make a double trip. My name is Donald Marquez. You're tuning into Your Insurance Connection, 702-236-2624. If this concerns you, call us today at 702-236-2624, 702-236-2624. If this is your first time listening to the show, this is valuable information. Not only do we talk about auto insurance when you come to see me, we talk about your homeowners or your renter's insurance policy, and we always talk about life insurance. Sometimes it's a difficult question to ask, who is your beneficiary? Who has the policy? Where is the policy? And your family members are sitting right next to you when you ask these difficult questions. And they don't want to say nothing. They freeze up. Because I come at them in a way that this is important to you, this is important to your family. You know, your family need to know all this. This is valuable information for you and your family. It is a tough conversation to have. And these last couple of weeks, I've two people that I know have passed away, and that's around my age. That is around my age. And the older we get, the more frequency we see in losing people that we know. Friends, family members, or people that we just know. As we get older, it happens. It happens quite often. And families are left behind with debt. On top of debt they already have. Is that how you want to treat your family? Do they deserve that? I'm just asking the question. Do they deserve that? This is a Donald Do. Pick up the phone today. Call me at 702-236-2624. 702-236-2624. Let's take a review of all of your insurances. Doesn't cost you a dime, doesn't cost you anything, but just a little of your time to come by, have a conversation with me, and we'll make sure you're properly insured. Now, I've many times I've pushed the paperwork back and said, you know what, we can't beat your rates. They're treating you right, and it's good to know that. But however, I will make suggestions, and if everything is tight, great. And I don't have to make suggestions, but I will say, you know what, why don't you do this? Why don't you combine that home and auto, because you have your auto insured somewhere else and your home insured with a different company, but combine those together to get a better discount. I've done that many times, and I don't charge you anything to come see me. Just a little time. You come up to my office, we sit down and have a conversation. Now, if I have a better plan, of course, we can move forward and getting you a new policy, whether it's home, auto, or life insurance. We can do that for you, Your Insurance Connection. I'm a broker. The insurance companies compensate me. Doesn't cost you anything. They compensate me. 702-236-2624. 702-236-2624. This is KCEP 88.1, home of the people station. And when we say it's the home of the people station, we give you information that no other radio station does. And when the fundraisers are starting to come up on 88.1 right here at KCEP, please donate to the radio station, because this is valuable information. The only thing you have to do is turn on your radio. It don't cost you anything to turn on your radio, But when you get this type of information, take advantage of this. We're on here talking. We have talk show hosts to talk about everything that pertains to you. Mortgage. Sheila does loans. She does loans. Sheila Smith. She comes on tomorrow from 10 a.m. to 10:30. She'll help you get a loan so you can buy that home. We have Greg DeVille come on almost every other day talking about buying homes. We have Like It Is Radio with Franklin and Cheryl. They keep you up on the political scene. We have so many talk shows. And the breakdown, we have the breakdown, and they break down everything. So the radio station has so many different talk shows, so many different topics to help our community be a stronger, better community, and you more focused on your financials. This is financial literacy at its best. It truly is. When you purchase a life insurance policy, you're putting equity in your family's home. Just imagine $100,000 equity in your home. Go to the bank, try to borrow $100,000 cash and see what they're going to charge you, if you can get it. But when you purchase a life insurance policy, it's a gift of love. Telling your family, you know, when that day comes, and don't say if. That's a miss. So when you say if, you're saying it's never going to happen to me, or it's a possibility it can happen, but if. When it happens, your family is devastated. And it happens far too often. There's no money left or no policy to be found, and everybody's tearing up the house to find it. Do not do your family like that. Please don't. Sit down, have a conversation with your children, have a conversation with your spouses, have a conversation. This is my life insurance policy, and just don't say I got it on my job. I know very few people that job policies have paid out, and I've been doing this for the last 23 years, okay? Very few people that I know that job policies have paid out. Now, think to yourself. Now, you know a lot of people, right? And a lot of people, church members or family members. How many of those people and people that have passed away do you know that the job paid out? Now, can you think of like at least 3 people that the job paid out for the loss of a family member? Now, if you can't come up with 1 or up to 3, then you know that job insurance is okay, but it don't pay out that often. This is why you need a separate life insurance policy. I talk about life insurance a lot on Your Insurance Connection, because in our community, this is where we need the most help to better understand life insurance. Now, if you purchase a life insurance policy and you see the policy going up every 5 years, or if you bought term and it's about to expire, you need to talk to me. 702-236-2624, 702-236-2624. I want to also thank the listeners that came in that purchased home, auto, and life insurance, and also the people on Facebook that, you know, that asked us those questions that Frank is getting ready to break it down right now. Good morning, Frank.
Good morning.
How was your weekend?
It was busy. It was cool, though.
It was busy and cool. Oh, so I was hot and you were cool.
Well,
it was hot outside.
Yeah, it was hot and cool.
Hot and cool. Well, why don't you tell the people a little bit about yourself real quick, Frank, and we're going to get right into the questions.
Okay. Yeah, real quick, I do marketing and advertising for local businesses, primarily with video, mostly with doing video posts and creating YouTube channels for local businesses. So if your business doesn't use YouTube as one of your sources of marketing, please contact me. 702-979-4877.
Yeah.
Applause also. Thank you.
Thank you, Brian. He's awake. Oh, all right. So from our Facebook followers, what do we have today?
There are a few life insurance questions. The first one, this person says, my wife and I have been shopping around for life insurance. We're either going with a 20-year or a 30-year term. Now, he was quoted around $30K for a 30-year, $750,000 policy for his wife and himself. That amount is the total cost we pay over 30 years. Meanwhile, a 20-year, $750,000 policy for his wife and himself is about half of that cost. Mm-hmm. So he said, why would an additional 10 years cost so much more? Is there really that much more risk for a 30-year versus a 20-year?
Oh, I mean, that's good. So this customer has figured out one of the key elements of a life insurance policy. And the key element is this. He is buying money at a low cost. So if he's paying $30K Just think about it. Go to the bank and say, give me $750,000 and I'm going to repay you back $30K. It's not going to happen. It's not going to happen. He's spending $30K over a 30-year period, so he's chipping away at it to protect his family. Because this person realizes it takes $750,000 to cover his mortgage, to make sure his family is whole, whether he's there or not. And that's a man's duty to do this. Maybe you can't afford the $750,000 policy, and I do write these policies, by the way, the larger policies, because people want to protect their family. People want to make sure when that day comes, their family is whole. They don't have to worry about anything. It's all being taken care of. However, it is worth the extra 10 years. Now, if you qualify for a term for 30 years, take the 30 years. That's my advice. Now, if you have a plan because your children are a certain age for a 20-year policy and then convert it over at a later time to a universal life, you could do that too. I don't want to get too complicated, but you can always take a term insurance policy. Take as many years as you can, because you purchasing the life insurance policy at a very low cost as far as it's costing you. Now, the recipient of this $750,000 life insurance policy, if a person passes away during that period, is not going to pay any money on that $750,000 as far as your taxes. That is a tax-free benefit. So take as many years as you can. That's my advice. However, if you take a 20 or 30 year, you want to look at the conversion period, or better yet, call me. We could take care of your 20 or 30 year term insurance policy. Now, keep in mind, the younger you are, the less you're going to pay. And the younger you are, the more qualified you can get, up to 30 years. Now, if you're 58 and under, you can get a 30-year term insurance policy. 59 and older, now the years are going to be shortened, 20 years at 59 and over. In most cases, it's very rare when I can pull up a male and get 30 years on a 58-year-old male. I mean, a 59 or 60-year-old male. I can't. It's going to be tough. But we can get 20, maybe even 25 years. Call me today at 702-236-2624, 702-236-2624, 702-236-2624. My name is Donald Marquez. You're tuning in to Your Insurance Connection. Good question, Frank.
All right. The next one is about a 23-year-old male that was thinking about getting a life insurance policy but has no idea where to start looking. So he says he makes $66,000 after tax. He almost has no savings, but he's been starting to do savings since he's got his job, and says that he's focused more on paying off his student loans and putting aside 5% of his weekly income. So he said currently he's not married, but plans to get married in a few years, no kids. What type of policy should I be looking at?
Well, that's a good question. That's really good. And you're never too young to buy life insurance, by the way. Let me say that. You're never too young. You're never too young to buy life insurance. It's a protector. Now, at that age, because I get excited about when a 23-year-old is interested in protecting and starting a financial, start his finances early. The earlier you are, the better you're going to be. Now, he has a couple of options. As long as you're healthy, get a universal life insurance policy. We offer universal life insurance in my office. Now, UL's a universal life will protect him for the rest of his life. He's going to purchase that policy at a low cost. What are you buying when you do what are you doing when you buy life insurance? You're buying protection. It is protection at a low cost. At the earlier you are, the better advantages you have of buying money at a low cost. You cannot go to the bank and ask the banker to give you $300,000 and only pay about less than $1 a day. You can't do it. You can't do it. It's not going to happen because they want all the money back plus interest. When you purchase a life insurance policy, the younger you are, you're going to pay less for that policy. In the long run, you're going to put less in it than the policy would pay out. You buy money at a low cost. It's a great savings vehicle as well. If you're terrible about saving money, if you can't save money, get a life insurance policy. Now, I've had people come to me and say, well, okay, what the policy costs, because you're older and you waited to get the policy, I can save the money. No, you haven't saved the money up until this point. So you can't, and don't ever say, I can't afford it. You cannot afford not to have it. Afford it. Because someone has to pay for that funeral cost, and that's about $15,000 today, and the funeral homes want all the money up front. There's no layaway. There's no payment plan. We need all the money. We understand your loved one is back there, your grandfather, your grandmother is back there. We need the money in order to perform the services. A lot of you have to go, resort to cremation. You don't want to cremate your parents, but sometimes, and you have to live with this the rest of your life. But even if there's a cremation, we can help you with a policy that will fit your budget. You can pick the due date. It'll come directly out of your checking account each month. We can help you with that at Your Insurance Connection. We can do the shopping for you, so you don't have to shop for insurance for yourself. We shop for you. We're insurance brokers. We represent 66 life insurance companies. Yes. Now, I don't write all 66 companies. When we sit down and have a conversation with you, I have about 12 of my disposable companies that I will put you with and make sure it fits your budget. 702-236-2624. That 23-year-old can buy a lot of life insurance at low cost for the rest of his life. Let's get that out of the way. Let's get that out of the way. He can get a $500,000 policy for a little or nothing for the rest of his life, and he's financially whole because he's buying money at a low cost. 702-236-2624. Veronica is going to take your name and your phone number, and we'll call you right back after the show.
All right, we got one more. This person says that they've reached the point where their work-offered life insurance will no longer be enough to support his dependents if he passes, and he's talking with a life insurance agent next week about getting another policy. He's in his mid-40s and wants to know what should he be looking at as far as whole life or term.
You got to be calling me.
Yeah, I know. Trying to get him. Send him your text.
Yeah, you should be calling me, and that's the real deal. Because listen, folks, I don't hear these questions until Frank bring them on, and he's talking about to another agent, and he's asking me what to do. Well, the other agent should be telling him what to do.
Well, he wants to talk to an agent.
Yeah, well, I'm an agent. He should call me at 702-236-2624. That's the best way I can answer that one. Contact me. Contact me. And let me sit down and with you, and I'm gonna make the right decision for you. Listen, I have nothing to gain by selling you a policy that's going to expire. And I tell people this: if you're in your 60s, do not buy term insurance. What are you doing? What are you doing? If you're looking for final expense, we can help you with that. 702-236-2624. A term insurance policy at the age of 60 is probably only going to be a 10-year term insurance. Is going to go up every 5 years or just 10 years. Okay, now you're 70 and you're looking for life insurance all over again. Does that make sense? Now you buy another 10 year, you're 80, you're buying life insurance at 80. That makes no sense to me. And then you have to qualify for it. Now, on a 10-year term policy, there are restrictions because you may have to take a physical, because the restrictions are the minimum policy you can take out on a 10-year term policy is usually about $100,000. You may or may not qualify for $100,000. We can get you a whole life policy. This goes out to my seniors out there. You need a whole life policy. Let's take care of that final expense. I have to have people come in and they evaluate life insurance versus getting a funeral pre-need. The life insurance costs less, a third less. It costs a third less than a pre-need, and there may be taxes that your beneficiary has to pay as a result purchasing a pre-need, and it costs a whole lot more on the pre-need. Get a life insurance policy that builds cash value. There's no cash value in a pre-need. There's no money to be paid to the families on a pre-need at all. Okay? When you get a pre-need, you're just paying for your services, and you're going to pay for it over a period of time. When you get a life insurance policy, you're going to do the same thing. But the difference is this. With a life insurance policy, and if you qualify, you have insurance day one. 6 months later, if you pass away, and I'm going to use that word if, and I'm going to use it lightly, if you pass away within 6 months, the life insurance policy will pay on a final expense. Now, on a pre-need, and you're still making payments, your family may be responsible for the rest of that balance to take care of the services. My name is Donald Marquez. Call us today at 702-236-2624, 702-236-2624, 702-236-2624. My location is right on the corner of Sahara and Rancho, and yes, in the beautiful U.S. Bank building. I have a great view of the Las Vegas Strip. 4 big, huge windows. 4 big, large windows. You can see the Las Vegas Strip. Yeah, you can see the Las Vegas Strip from my window. And they don't have me in that office because they like me. They don't. I had to move 4 times to get in that office. And I've been there and I'm not going anywhere. So I've been doing this for 23 years right here in Las Vegas, Nevada. My home. Born and raised in Vegas. And I love being here in this community. I've been a lot of places throughout this country, and there's nowhere like Las Vegas. Yes, we experienced the heat, but look at what's going on in Florida with the hurricanes. I can't imagine living in a situation like that where a hurricane is just could be coming down my neighborhood and destroying everything that I worked hard for. You know, we do have the heat, and it's getting ready to cool off. So I feel we're blessed to live in this community, to be a part of a growing community. Everything around you is brand new, just practically new. Everywhere we go, we have Summerlin, we have Henderson, and all these communities are growing throughout the valley. And you could take advantage of the homes comparable to the Los Angeles or the California beach areas are still affordable here in Las Vegas, Nevada, and people realize that. They're moving in. If you want to buy that home, now is the time to really start thinking about it. Now you need homeowners insurance to close. So keep that in mind. You cannot purchase a home without homeowners insurance. If you're a renter, you're going to need renters insurance today. I visit some of these communities where they rent out condos or apartments, and I've seen burnouts. I've been there to see the burnouts, and people are devastated. So what they do in the offices, they take donations, and people drop off clothes and food and whatever they can. You know, school supplies for the children. It shouldn't have to be that way. Get you a simple life insurance policy. Get you a simple renter's insurance policy. Get your homeowner's insurance policy. My name is Donald Marquez. We're going to try to get the Don Father here next Tuesday. He was supposed to come today, but sometimes he comes, sometimes he don't. We never know. He just pops up. My name is Donald Marquez. Thank you for tuning in to Your Insurance Connection. We're going to do this again next Tuesday from 9:30 to 10 o'clock. Everyone have a safe week. Until then, just keep it crispy.